All right, so hey everyone, hey, welcome back. We're diving right back into the crypto world today, and it's March 18th, 2025. Things are pretty tense right now. The whole market seems to be holding its breath,
hmm
just waiting to see what Jerome Powell and the FOMC decide about those interest rates tomorrow.
Yeah, it really is fascinating how much power the FOMC has, right? I mean, we're talking potential huge swings through the whole crypto world, depending on if those rates go up or down.
For sure, and right now things are so uncertain. We're seeing a total crypto market volume of just $72.94 billion dollars,
Hmm.
way below that 100 billion. Everyone's hoping for Powell's words tomorrow, and yeah, maybe even more how the media spins them could really send Bitcoin flying past 2 trillion or crashing down below 1.5 trillion.
Yeah, and it's not just the direct economic impact either, right? It's how it's all perceived. If the Fed signals they're going to be hawkish, it could spook investors and send them running back to what feels safe, like traditional assets.
Makes sense. So basically, the entire crypto world is just waiting on the edge of their seat for the FOMC to make their move. But hey, amidst all this anticipation, there's other news happening. Remember last week when the South Korean Democratic Party was pushing for Bitcoin as a strategic reserve?
Oh, yeah, that was a bold move. And this week we saw the Bank of Korea totally shut down that idea,
Yeah.
officially rejected the proposal. They cited Bitcoin's volatility and the cost of cashing out, but I know it makes you wonder if there's more to it.
Right. And here's where things get interesting. The IMF's history with developing nations, especially El Salvador's recent struggles after adopting Bitcoin as legal tender, it raises some eyebrows.
hmm
Is it possible the IMF is kind of like putting on the pressure behind the scenes, pushing South Korea to resist Bitcoin?
It's definitely possible. I mean, the IMF has been openly skeptical of Bitcoin, and they have a lot of influence on global financial policies. We can't underestimate that. This rejection could signal a wider distrust of Bitcoin by these powerful institutions, a resistance to its decentralized, uncontrollable nature.
Yeah, we'll definitely keep an eye on that. But let's talk about some potential good news. Have you heard about this first ever SUI ETF filing? Canary Capital is making a big bet on this newcomer.
Yes, and they're not alone. Major players like Grayscale and VanEck are already backing SUI, which is really interesting. It suggests growing institutional interest in this platform that's trying to find its own space in the blockchain world.
So what makes SUI so special? Could it actually compete with the big names like Bitcoin and Ethereum? Or is it more likely to challenge players like Solana in specific areas?
It's definitely too early to say SUI is the next king of crypto. It's facing the same challenges as any new platform, proving it's actually useful, getting people to use it, and navigating all the changing regulations.
But the fact that it's catching the eye of these big...
Absolutely. If SUI takes off, it could speed up development in specific areas, especially decentralized finance and gaming. This could lead to way more uses and applications for blockchain technology, bringing even more users and investors into the fold.
Interesting. Seems like every week brings a new wave of developments, just pushing the boundaries of what we can do with blockchain. Speaking of pushing boundaries, the European Central Bank is doing something kind of intriguing and ironic. They're developing their own blockchain technology while at the same time criticizing President Trump's crypto policies.
Yeah, it's a strange situation, isn't it? They're warning about the dangers of decentralization, but also trying to use blockchain's power for their own centralized goals.
Hmm.
One ECB official even said Trump's policies could spark a global crisis. But recent data shows inflation's actually gone down.
So are they just trying to have it both ways, enjoying the benefits of blockchain but keeping the control they're used to?
Seems like it. They want to control spending and transactions, which is something that decentralized cryptos like Bitcoin totally challenge. This highlights the tension between those traditional financial systems and the whole decentralized idea of crypto, a power struggle that'll probably keep going for years.
It makes you wonder, right? Should we be skeptical of their motives? Are they really worried about global stability or just protecting their own turf? It seems like we need to really carefully think about what these institutions with so much at stake are saying, especially when it comes to something as disruptive as crypto.
Absolutely. Critical thinking is so important here. We can't just accept everything we hear, especially from powerful institutions.
Okay, now before we head over to Dubai and their blockchain adventures, there's one more story that really highlights how important security is in the crypto world. Did you hear about the attempted robbery of Amaranth, the OnlyFans star?
Yeah, that was a scary situation. It's a reminder that as crypto gets more popular, it also becomes a target for criminals. This group of teenagers attacked her at gunpoint, trying to steal her crypto.
And one of the attackers was later found with a gunshot wound. This could end so badly, and it really shows how important it is to be careful and take safety precautions.
For sure. Avoiding public disclosure of your crypto holdings is crucial. And using decoy wallets can add another layer of security, making you less of a target.
Great tips for anyone holding crypto, a reminder that there are real-world risks alongside all the potential rewards.
Definitely. Staying informed and protecting your assets is essential. It's about finding that balance between embracing the exciting opportunities of crypto and being aware of the dangers.
All right, so we've talked about some major crypto happenings, from the FOMC's big decision to SUI's ETF filing, and even some real-world dangers. Now let's shift gears and head over to Dubai. They've been making some bold moves in the blockchain space, haven't they?
They have. Dubai seems determined to become a global hub for blockchain innovation and adoption, and they're moving fast.
And their latest move involves Avalanche, right?
Mhm.
They've welcomed them as their first apex member in this association called the Block. What exactly does that mean?
It's a big deal. The block is key in promoting blockchain in Dubai, and being an Apex member gives Avalanche exclusive access to investors, regulators, and developers in the region.
So it's a strategic partnership that could really boost Avalanche's presence in the Middle East and North Africa, a region that's becoming more and more open to blockchain.
It definitely seems like a win-win. But there's an interesting question here. Does joining an association like the block go against the whole idea of decentralization? Is this a necessary trade-off for wider adoption, or is it a step towards centralized control?
That's a great point. It highlights a crucial dilemma facing the blockchain world.
Yeah.
How do we balance the desire for mainstream adoption with the core principles of decentralization? It'll be fascinating to see how this partnership develops and whether it leans one way or the other.
Absolutely. It's a microcosm of the bigger struggle between the established order and the disruptive potential of blockchain.
And speaking of mainstream adoption, there's another development out of Dubai we should talk about. Remember back in August 2024 when Crypto.com integrated with Standard Chartered Bank?
Yes. That was a huge step, a sign that those traditional financial institutions were starting to take crypto seriously.
And now they've just gotten a derivatives license in the UAE, allowing them to offer complex financial products like futures and swaps initially to institutional clients. This expands on their existing virtual asset service provider license in the region.
This is big news, not just for Crypto.com, but for the whole crypto world in the Middle East. It really strengthens Dubai's position as a global hub for regulated crypto services, and it suggests that regulators are becoming more accepting of crypto derivatives.
It seems like Dubai is going all in on crypto. With all these developments, Avalanche's partnership, Crypto.com expanding, and the region's openness to blockchain, are we seeing the birth of a new crypto powerhouse in the Middle East?
It's definitely possible. The region has a history of financial innovation, and they seem to want to be leaders in this new tech wave.
It's like a new chapter in the story of finance, and Dubai wants to be the main character. But before we get too ahead of ourselves, there's something we need to consider: the current state of the crypto market itself.
That's right. We can't ignore the bigger picture, especially with the FOMC meeting coming up. While Dubai and the Middle East are making moves, the global crypto market is still facing challenges.
And one of the biggest challenges right now is the worryingly low stablecoin volume.
Yeah, it's a concern because stablecoins are so important to the crypto ecosystem. They're like a bridge between the traditional financial world and the volatile world of cryptocurrencies. They're stable, so people like them for everyday transactions and as a safe place during market downturns.
So if stablecoin volume is low, does that mean people are losing faith in the crypto market overall? Could it be a sign that they're hesitant to get in or are moving to safer assets?
Exactly. It shows that investors are unsure, maybe waiting to see what happens with interest rates in the global economy before jumping back into crypto. The FOMC meeting could have a big impact on stablecoin volume. If the Fed signals a rate hike, it could make investors even more hesitant.
And we can't forget about those tariffs President Trump announced earlier this year. They're supposed to start on April 2nd. And could affect global trade, which could then impact the crypto market.
It's all connected, a web of factors influencing each other.
It's like a giant game of Jenga, all these pieces carefully balanced. One wrong move and the whole thing could come crashing down. But on the other hand, strategic moves could make the whole structure stronger and lead to more stability.
That's a great analogy. And just like in Jenga, you can't know for sure which piece will make it all fall apart, but we can try to figure out what's going on and think about the most likely outcomes.
So let's do that. What are some key things we should be watching to get a sense of where the market might be going?
One of the most important is Bitcoin's dominance. Right now it's at 60.71%, which means Bitcoin's market cap is over 60% of the total crypto market cap.
Oh, wow. So that's actually an increase. Is that a good thing or a bad thing?
Well, it depends. During a market downturn, an increase in Bitcoin's dominance can mean that investors are moving their money to Bitcoin because they see it as a safer option. This can make the downward pressure on other cryptocurrencies worse, creating a kind of self-fulfilling prophecy.
That makes sense. It's like everyone's hiding under the Bitcoin umbrella while the storm's raging around them.
Yeah.
But what about Ethereum? How's it doing in all this?
Ethereum's dominance has actually dropped to 8.50%. This is partly because of the rise of other promising blockchains like Solana and, as we talked about before, SUI.
So there's a lot of competition going on with each platform trying to get its share of the market.
Exactly. And this competition is making innovation happen super fast, pushing the boundaries of what's possible with blockchain technology. It's a really exciting time to be watching this all unfold.
Absolutely. It's like a race to the top with each platform trying to offer the best features and get the most users and developers on board.
And the winner of this race won't necessarily be the one with the biggest market cap today. It's about long-term vision, sustainable development, and a real commitment to building a strong and decentralized ecosystem.
So it's not just about being the biggest. It's about being the best, the most innovative, the most adaptable.
Exactly. The crypto landscape is always changing, and only those platforms that can evolve and adapt will make it in the long run.
Now let's focus on a specific player in this blockchain game. You mentioned Binance earlier. What kind of strategic moves have they been making?
They've been busy, especially with their Binance BNB chain. They've secured some big investments and are seeing a surge in activity on their platform.
Interesting. What kind of activity are we talking about?
There's been a big increase in the market capitalization of certain Binance Alpha tokens. For example, Zondo now has a market cap of $2.63 billion, while Virtual Protocol is at $451 million. That huge difference shows that some tokens are doing much better than others within the Binance ecosystem.
So is Binance becoming a breeding ground for new crypto projects?
It's definitely becoming a hub for innovation, attracting projects and developers who are looking for a platform with a strong community and good infrastructure. With their growing network of partnerships and investments, we'll probably see even more activity and growth on the Binance BNB chain in the future.
It seems like Binance is trying to be a major player in decentralized finance. But what about the broader DeFi market? What's going on there?
Unfortunately, the volume of decentralized finance is looking pretty bad. It's currently at $6.71 billion, which is only 8.90% of the total crypto market's 24-hour volume. This suggests a lack of confidence in DeFi protocols, maybe because of recent hacks and exploits and just the general uncertainty in the market.
And the total value locked, TVL in DeFi, is going down too, right?
Yeah, it's been steadily declining for the past few months. It's currently at $90.08 billion, with Lido dominating the space with $17.71 billion locked.
So DeFi is struggling. What's causing this downturn?
Well, the general market uncertainty is a factor. When investors are feeling cautious, they tend to pull back from DeFi protocols, which are often seen as more experimental and risky than traditional financial things.
That makes sense. Are there any other reasons?
Definitely. All the recent hacks and exploits targeting DeFi protocols have also made investors less confident. Security is so important in DeFi, and these incidents have shown that there are still vulnerabilities.
It seems like DeFi has a lot of potential, but it also has some big challenges.
It's high risk, high reward. The technology is still new, and there are definitely risks involved. But for people who are willing to deal with those risks, DeFi offers a really interesting alternative to traditional finance.
Okay, so we've talked about the DeFi market and its challenges. Now let's talk about decentralized exchanges, or DEXs. How are they doing compared to centralized exchanges?
The decentralized exchange dominance is pretty low right now at 21.18%. Ideally, this number would be closer to 40%, showing that more people are using DEXs for their crypto trading.
Right, because DEXs offer more privacy and security than centralized exchanges, where you have to trust a third party with your money. So why aren't more people using DEXs?
There are key reasons DEXs can be harder to use than centralized exchanges. They often need you to know more about blockchain technology and wallet management, which can be intimidating for new users. Also, they can be less liquid than centralized exchanges, meaning it can be harder to buy and sell large amounts of crypto quickly.
So there are compromises involved. But what about the volume of specific DEX? Are there any that are standing out?
PancakeSwap is currently in the lead with a 24-hour volume of $2.52 billion, followed by Uniswap with $1.31 billion. Other notable DEXs include Radium Orca and Meteor.
It's interesting to see all these different platforms popping up in the DEX space. It's like a miniature version of the whole blockchain ecosystem, with different players competing and pushing the boundaries of decentralized finance.
Absolutely. It's dynamic and always changing, and the competition is getting tougher. As more people learn about the advantages of decentralized finance, we can expect to see even more innovation and competition in this area.
So with all this talk about decentralization and blockchain disrupting traditional systems,
Yeah.
it makes you wonder, what role do governments and central banks play in this new world?
That's a tough question, and there's no easy answer. As we saw with the European Central Bank developing their own blockchain, some governments are trying to embrace the technology, but still want to keep some control.
Right. It's like they want to have their cake and eat it too. They want the benefits of blockchain technology, but don't want to give up the power and control they're used to.
Exactly. But the decentralized nature of cryptocurrencies like Bitcoin challenges the traditional role of central banks. It's a clash of ideologies, a battle between the old way of doing things and this new wave of financial innovation.
It's like a tug of war between the established financial system with its centralized control and old institutions, and this new decentralized world of cryptocurrencies and blockchain technology.
That's a great way to put it. And it's a battle that's still going on. We don't know who will win in the end, but one thing's for sure, the outcome will have a huge impact on the future of finance and the global economy.
It feels like we're moving into uncharted territory, a new era of finance, where the rules are still being written.
We are in many ways, but that's what makes this such an exciting time to be following the crypto world. It's a front row seat to a technological and financial revolution.
Okay, so we've covered a lot today, from the FOMC meeting and its potential impact to the rise of Dubai as the possible blockchain hub. But there's one more important question I want to explore before we wrap up this part of our deep dive.
I'm listening.
We've talked a lot about the technological advancements and the potential of crypto and blockchain to disrupt things. But what about the social and ethical implications? Are there potential downsides or unintended consequences that we haven't really talked about yet?
Yeah, that's the big question, isn't it? Crypto can seem so complicated, but it's really about giving power to individuals.
Empowering individuals. Huh. I like that. How so?
Well, think about it. Crypto lets you go around those traditional middlemen like banks and deal directly with other people. It gives you more control over what you own and more financial privacy.
And it's not just about the money, right? Blockchain tech could totally change so many industries, from supply chains to voting systems, which could make the world more efficient and transparent for everyone.
Exactly. Imagine a world where you can trace your food, know for sure a product's real or vote, without worrying about someone messing with it. That's the power of blockchain.
Sounds amazing, but are there any downsides?
Of course, no technology is perfect. We've seen how crypto can be used for bad stuff, like money laundering. And because it's decentralized, those activities are harder to track and regulate.
And there are the environmental concerns too, right?
Mm-hmm.
Like with crypto mining, especially those energy-intensive proof-of-work systems like Bitcoin uses.
Yeah, sustainability is a huge concern, and the crypto community needs to deal with it. We need to look at more energy-efficient options and find ways to lessen the impact of crypto mining.
So it seems like we need to be more thoughtful about crypto and blockchain. It's not all good. We need to talk about the potential problems too.
Definitely. We need to look at it critically, weigh the good and the bad. Blind optimism can be just as risky as being scared for no reason.
So for people who are new to crypto, where should they start? What would you tell someone who's feeling lost with all this information?
Start small and learn as you go. Don't feel like you have to invest a lot right away. There are so many resources online and in books that can help you understand the basics of crypto and blockchain.
It's like learning a new language, right? You don't become fluent overnight. You take your time, learn the basics, and slowly get more comfortable.
Exactly. And remember, this is a long game. Crypto is volatile. There will be ups and downs. Don't let those short-term changes discourage you. If you believe in the long-term potential of this technology, just stay focused on your goals and don't let that fear of missing out control your decisions.
That's a good point. It's easy to get caught up in the excitement and make impulsive decisions, but that's rarely a good idea for any investment, especially crypto.
And another thing is to diversify your portfolio. Don't put all your money in one place. Spread your investments across different cryptos and blockchain projects that match how much risk you're willing to take and what you want to achieve.
Diversification, classic investing advice that's super important in the unpredictable world of crypto.
For sure. And finally, never invest more than you can afford to lose. Crypto is still new and risky. Think of it like any other high-risk investment, and only invest what you're okay with potentially losing.
That's probably the most important advice for any investor, new or experienced.
Oh.
Don't let the dream of getting rich make you forget to be careful.
Exactly. Being a responsible investor is key, and that's true for crypto too. It's about finding the balance between exploring new opportunities and managing your risk.
Okay, so we've got a good understanding of the crypto world, some practical tips, and a sense of what exciting things could happen. But before we go back to the global stage and talk about that potential new crypto powerhouse, I wanted to mention something that's been on my mind.
I'm curious, what's been on your mind?
We've talked a lot about the technology and how crypto and blockchain could change things. But what about the social and ethical side of it? Are there potential problems or consequences we haven't talked about?
That's a really important question, and one we need to talk more about. Technology in all its forms is never neutral. It's shaped by the people who make it and how it's used.
Like we've seen how the anonymity of crypto can be used for bad things. We talked about money laundering, but there's also the worry about ransomware attacks, where criminals demand payment in crypto, making it hard to track them.
And it's not just about crime. There are bigger social implications, too. What happens when wealth and power become even more concentrated in the hands of the people who control these technologies? How do we make sure the benefits of blockchain are shared fairly and don't make existing inequalities worse?
Those are hard questions with no easy answers. It seems like we need to have open and honest conversations about the potential downsides of this technology, even as we're excited about how it could change the world for the better.
Absolutely. We can't just blindly accept this shiny new technology without thinking about how it might impact people, communities, and society as a whole. It's our responsibility to shape this technology so it benefits humanity and aligns with our values.
It's a reminder that technological progress isn't always straightforward or without challenges. It's about finding that balance between innovation and responsibility, pushing the limits of what's possible while making sure those possibilities are used for good.
Yeah, it's a balancing act for sure, and one that we'll need to keep talking about and thinking critically about. But let's go back to the global scene. Before we went on that tangent, we were talking about the potential for a new crypto powerhouse in the Middle East.
Right. With Dubai taking the lead and other countries like the UAE and Bahrain following close behind, it's hard not to be interested in what the region could do. They're not just using crypto, they're really encouraging innovation and making a welcoming space for blockchain businesses. Yeah, it's like they've seen a chance to jump ahead, become leaders in this new world of finance.
Yeah.
The Middle East has always been a center for global trade and finance, and now they seem to want to do the same for the crypto world.
Exactly. And they're doing it differently from other parts of the world. While some countries are struggling with regulations and trying to squeeze crypto into their existing systems, the Middle East seems more willing to embrace the disruptive nature of blockchain and build something totally new.
It's almost like watching a new world order take shape, with different players and different rules. And the speed at which things are happening is amazing. Just a few years ago, the idea of Dubai being a global crypto hub would have sounded crazy.
It shows the power of having a vision and being able to adapt. They've seen how blockchain can change things, and they're moving fast to take advantage of it. This proactive approach could give them a real edge in the long run.
So what does this mean for the big players in the crypto world? Could we see a power shift with the center moving away from the West and towards the East?
It could happen. The crypto world is still pretty young, and things are always changing. The Middle East's strong support for blockchain could create a new center, attracting talent money and new ideas.
That's an exciting thought, and it could lead to a more diverse and decentralized crypto world. Competition is always good, and having multiple hubs of innovation can only help the whole industry.
Totally. It makes everyone step up their game, innovate faster, and create more value for users. A crypto world with many centers of power is stronger and more dynamic.
And it's not just about geography either. The Middle East's approach to regulations and their willingness to accept what makes blockchain unique could also influence how the technology develops globally.
Right, they're not trying to force something that doesn't fit. They're creating a new space that's made for it. This could lead to more innovative and effective regulations, which could benefit the whole crypto world.
It's an exciting time to be watching all of this unfold. The crypto world is full of surprises, and the story is far from over. Who knows what's coming next?
That's what makes it so interesting, right? The crypto space is constantly changing, pushing boundaries. It's a wild ride, and we're all on it.
Well said. It's been fantastic exploring the crypto roller coaster with you today. We've talked about so much from the FOMC meeting and its potential impact to Dubai's rise as a possible crypto powerhouse, the ethical questions around blockchain, and even some tips for people who are new to crypto.
It's always great to dive into these complex topics with someone as enthusiastic and insightful as you.
Right back at you. But the real stars are our listeners. Thank you all for joining us on this deep dive into the constantly changing world of cryptocurrency.
We hope you learned something, sparked your curiosity, and maybe even found a new passion for exploring all the possibilities of blockchain technology.
And remember, this is just the start. The crypto revolution is still in its early days, and there's so much more to discover and explore.
So stay curious, stay informed, and stay involved. The future of finance is being shaped right now, and we're all part of it.
Until next time, keep your minds open and your wallets safe.